2024 was BSE, and that stock has also surged more than 145% so far this year. But HDFC Institutional Equities in a recent note said that there was a notional volume drop which is significant across equity exchanges after that 1 weekly expiry per exchange that was implemented, and that has also led to them having a reduced rating on the stock. Now, to discuss this and more, we have Sundararaman Ramamurthy, the Managing Director and CEO at BSE, joining in. Mr. Ramamurthy, good afternoon. Thank you so much for joining in, and season's greetings to you and everybody at BSE. I wanted to start off by asking you about these implementations, right, of these new F&O norms. That it says that notional volumes have dipped significantly. Premium volumes have also dropped compared to that in the third quarter, which means you are getting now better premium realizations. Now, what is the impact that you are seeing post the implementation of these new norms?
First of all, thank you so much, and good afternoon and season greetings to you for having me with you today. SEBI implemented all the rules in order to ensure market protection and also bringing better participation in the market compared to anybody participating. So from that, one of the important the requirements or rather outcome expected was there will be a rationalization of the notional volumes across exchanges post implementation. Having said that, out of the 6 implementation, only just 2 have taken impact. The third one is going to take effect from Jan, and the remaining of 3, 2 in February and 1 in April. So ascribing whatever the market situation today totally to whatever the regulatory directions are may not be statistically correct, because there is more to come in the days, because it is just the beginning. And the expectation was to bring down the notional, because there were too much of froth in the market. That's what some of the people were feeling. And also this month has been a month of lot of turmoil, with lot of activity in US post the elections and the Fed rate cut, and India's inflation numbers being perceived as high. Multiple reasons because of which the market went up to say 85,000, 86,000, and then came to 72,000, 77,000, and then went to the type of a market movement has been seen. So therefore, it is too early to say that this is the impact of the SEBI regulations that have come into effect. Yes, sure. Nationals have come down as it was expected to be brought down.
Mr. Ramamurthy, good afternoon. Sir, what I want to understand is that has the impact been more pronounced in the BankX volumes? Because from what I understand, that was the one product where now you've moved to monthly, and the liquidity all of a sudden has dried up there compared to Bank Nifty, where also volumes have come down, but not as much as is the case with BankX.
It's a fair question that you are asking. BankX, see, the entire derivative setup in BSE itself is a relatively new one.
Yes.
It is just 15 to 16 months old for Sensex, and even much lesser for BankX. So BankX is a relatively new index, and whereas Bank Nifty is a very, very mature index with significantly huge levels of participation, and it started as a monthly contract, whereas BankX started as a weekly contract. So we may not be able to expect the same type of impact in BankX compared to what you are seeing in Bank Nifty. Indeed, BankX volumes have drastically come down. We do see some activity in the monthly contract, but not the levels of activity which we were seeing week on week in respect of expiry in BankX before.
So in that case, would it be fair to say that the BSE volumes would take a significant hit, and in that case, the earnings that BSE showed last quarter was perhaps the peak earnings, at least in the foreseeable future?
Generally, we don't give any futuristic numbers, but I'm not able to conclude it that way. The reason why we are not able to conclude it that way is the income earned is based on premium. The one part of the expenditure is based on notional, another is based on the number of contracts. If the quality of premium improves compared to the fall in notional, and also the fall in the number of contracts traded, because the contract size is also going up, naturally then it will lead to an advantageous situation compared to a disadvantageous situation. Because while the income will increase because of the premium quality becoming better, the cost will come down because of the notional and the number of contracts coming down. As you would recall, we have been working very heavily on getting traction in respect of next week and next to next week contracts, and also in monthly contracts of Sensex. And also we have been trying to, we have already decided to move the expiry to Tuesday instead of making it Friday.
Sure.
In Friday, Friday was the only date available, so we took. So naturally, since all the other 4 days were fully busy, the traction in respect of Sensex was more on expiry and expiry -1, leading to a slightly lesser quality of premium, which will get addressed. So at this point of time, because of fall in notional volumes, revenues, top line or bottom line would be hit is too early to predict. We have to wait and watch for the full impact of all the 6 requirements coming into existence.
I get that point. You know, Mr. Ramamurthy, that's an interesting point you're raising. And I remember asking this question to Mr. Ashish Chauhan. And you know that now that you move to monthly and the premium obviously is much higher in case of monthly expiry, does that in a way actually benefit you? And his reply was that if you shut down the say Colaba Causeway Market or the Linking Road, it doesn't mean people will move to Gucci showrooms to buy the bags. So it will still impact the numbers. So that is where my question was coming from. That there is going to be a hit in terms of your profitability overall.
See, there is a difference which I always make as a mention. In respect of a matured exchange, it is a saturated growth growing above that. In respect of an exchange like BSE, it is still in a catch-up mode. The catch-up growth behavior sometimes is different compared to the saturated growth mode. I am not indicating any specific thing here. I am only simply making a point. Probably at this point of time, it is a bit early. We have to at least wait till April to see the impact.
Mr. Ramamurthy, two-part question. Have you seen any spillovers in the cash market because of these new norms? And also part 2 of my question is, you've also introduced new contracts, both you and the NSE, on the F&O side. Is this to offset the dip in volumes because of these stricter norms, sir?
Let me take the cash market part of it first. The cash market volumes are down significantly compared to the past. Around 20% down I am seeing. It may be because of multiple reasons which are not necessarily because of derivatives. And if by spillover you thought that there will be more volume in cash, that has not happened. The global impact and the FPI is withdrawing from the Indian market, probably because it's the year end and they want to show profit for their books, and many of them going on vacation. All this could be the reason, which may not be a very difficult and different trend. So the cash market spillover in terms of increasing in volume certainly has not happened. There has been a reduction in volumes. As far as new contracts are concerned, the currently existing contracts which are being traded in BSE is only Sensex and BankX. More indices should come because of the exchange interoperability circular that has a guideline which has come in place, which is to be discussed and decided. And once it is there, more contract will come. Many of this will not be from a perspective of just offsetting what could be the revenue loss or revenue profit. What is required for the market, because MIA will have a twin hat to wear. One is the profit making hat, and second is as a socially responsible institution as an MII. So introducing contracts could be more from a hedge perspective as well, from if there is a problem in one exchange, how to move to the other exchange. And that need not necessarily be coming out from a revenue perspective.
Sure. Mr. Ramamurthy, I'm sure you would have heard the news overnight about some investors picking up stake in Metropolitan Stock Exchange of India. And the logic being given is that now there is space for another player because the SEBI directive clearly says 1 expiry per week. It doesn't mean how many exchanges are there. So do you see that revival and perhaps the third exchange being there and offering another expiry, weekly expiry?
Yeah, I saw the news item. See, as I've always been maintaining that India is a very large country and there is more room for more products. Now suddenly the number of products have come down. So one more product coming in is, I think from a market perspective, is good for them. I also saw that MSCI is the Metropolitan Exchange is trying to revive itself by issuing fresh shares and more market participants are taking part of it, I think it's a healthy sign. One important thing always comes to me is success of a product lies in its utility and market awareness. So these two are very important constituents to make a product success. I am sure the upcoming exchange will try to work on these 2 points so that India gets the benefit of one additional contract for them.
All right, Mr. Ramamurthy, thank you so much for joining in and sparing time. Wish you good luck and a very happy new year into 2025 as well. That was Mr. Ramamurthy there, the MD and CEO of BSE. It's been a very strong year for the stock in itself, over 130% in 2024. But as we slip in